It's a Matter of Insurance, presented by the New Hampshire Insurance Department. The New Hampshire Insurance Department is a state agency that regulates the commercial insurance industry in New Hampshire. Have questions or need assistance with your coverage? Call our Consumer Services Division at 1-800-852-3416 or email consumerservices@ins.nh.gov. Learn more about us by visiting nh.gov/insurance. I'm A.J. Kierstead, the Consumer Outreach Coordinator at the New Hampshire Insurance Department. In this episode, we'll talk about your rights as a consumer to appeal an insurance claim denial with Deputy Commissioner D.J. Bettencourt. Fraud Director Brendhan Harris discusses an auto insurance fraud case revolving around a '69 Chevelle, and we'll kick things off with some helpful insurance tips for weddings. Let's start my interview with Property and Casualty Director James Fox and Property and Casualty Counsel Emily Doherty. As wedding season approaches, the New Hampshire Insurance Department has released a consumer advisory providing couples valuable information to help ensure their special day is protected. Thank you both for joining me today, and what we're going to do is basically run down some of the important information in this advisory so consumers are prepared. So let's start off with what might be the most obvious and earliest sign of an upcoming wedding, which is engagement rings and other jewelry that's related to weddings. And what are some things people should consider for insurance on that?
Okay, this is James. So there's really kind of two ways to really insure any valuable jewelry, which would include wedding rings and engagement rings. One is if you have a homeowner's policy. Not everyone does, but if you have a homeowner's policy and you have something that's really anything that's more valuable than your standard things that might be covered under your policy, it's best to call the insurance company and have it scheduled, which basically means you say, I've got a wedding ring or an engagement ring. It's valuable. I'd like it to have it insured. Then you're usually required to then go get it appraised. You'll have an appraisal. And then the insurance company will take that in and they'll add it to your homeowner's policy. So that's the first way to do it and probably the easiest way. The second option would be to call an insurance producer, usually known as an insurance agent. And then you can get an individual policy, an inland marine policy, it's called, which is just a fancy word in insurance because we always have to put things in certain places. And then they will basically insure that ring for what it's worth, again, on an individual policy basis. And in all cases, you know, there's always the one caution I tell everyone is you need to read your policy to see exactly how it's covered, what might be excluded, and then look at what you're worried about. And then if there's a concern, you're like, well, I think I'm worried about this, then you should call your insurance company and talk to them about exactly how would that be covered. Especially, you know, even if you don't read your policy, call your insurance company and say, look, this is really my concern. I want to know, is that going to be covered or not covered? And just talk it through with them.
Something many people don't consider necessarily is event insurance for your wedding venue. And guess what? You're going to be inviting a bunch of people, possibly from all over the world if you have friends from far away. They're going to be traveling to see you, and you want to make sure that the day of the actual wedding you have protection. What are some things people should consider there?
Again, you know, so event insurance, much like if you got an inland marine policy for your ring, that is not like your typical policy, like a homeowner's policy or an auto policy. So the best thing to do there, I would say, is to work with a producer, or as we base a lot of people call it, an agent, and then the agent can, in essence, shop what you're looking for, which is an event, which is your wedding. And then if there's cancellation, so basically most policies have liability sections and property sections. This would have a cancellation section, which is a little bit different. But you then also have, if there's any liability you incurred during the event, it would be covered. And if there's any damage to property during the event, it would be covered. Again, though, this isn't like a homeowner's policy or an auto policy. And the reason I keep saying that, those are really highly regulated areas of insurance that are every policy you buy in those two areas are going to be very similar. They don't vary that much. In event insurance, that is not that. So basically, we review those forms here at the department, and we make sure that there's nothing in there that they're trying to be misrepresenting what the coverage is. So if it said we give you insurance for cancellation, and then in the exclusion it says anything for cancellation, that would be a problem. But they could say we're going to give you coverage for cancellation, however, we won't in these particular circumstances, and that would be okay. So that's why it's important in this area to, since the policies vary, to work with a producer, an insurance agent, and read through exactly what you're going to get and make sure you're comfortable with that, and have the insurance agent give you a few different policy choices. So, but it could, if you get a good event policy, you could protect yourself from there being a problem at your event, whether it's a liability problem that happens during the event or some damage to property or cancellation of the event itself. So it can be very valuable, especially in today's world where these weddings can be extremely expensive to put on. I guess if you're just eloping, you don't need this type of thing. But if you're putting on an extravagant event, you probably would want to look into that with an agent.
And certainly it's not in the consumer advisory, but for people who they go to the venue, they have insurance, or they say they have insurance, what should people do to make sure that they actually have the coverage they need?
Well, if you're going to, like a country club, they're going to have some insurance, but they're not going to have insurance for your event. They're going to have insurance for their liability, property damage to their facility, which even if there is property damage to their facility, so they may go to their insurance company and say, oh my God, our facility was damaged. We would like to get coverage for that. And then the insurance company may pay that, and then they may come after you if you cause the damage and want coverage, want to recoup that money. So you have to be very careful about, even if there is a policy, I wouldn't really rely on that, because the first issue is who are they covering. And an event facility is covered. They're worried about themselves. They're not worried about you. And in their contract that you may have with the event, they're going to try to shift any risk over to you. So again, that's why it's good to work with an agent. So if I did anything, I would bring my contract I signed with the facility over with me to the producer and say, okay, here is the contract, here's where we're going, here are my concerns, and slowly go through it with the agent.
Say you're one of the lucky ones that gets to travel for your honeymoon. Maybe, I'd imagine there's a few different things that people should keep an eye out for when it comes to insurance. But let's start off with rental car coverage, which we've covered before in a travel advisory, but it was definitely relevant also to wedding season.
That is always a tricky thing. I always say when it comes to when you go on a trip, whatever type of trip it is, and you're going to rent a car, I can tell you personally what I do is I get the car insurance from the rental company, even though I have car insurance on my car with full coverage. So that's, if I say full coverage, is liability coverage and physical damage coverage. That usually is sufficient. However, when you rent the car, there's really two things that may come up. There might be some things in the contract with the rental company that obligates you above and beyond what your insurance company on your car is willing to provide. So basically, the rental car is a substitute vehicle. So you are going to get coverage under your policy, but as in all policy, there are limits. And typically, you get what's called actual cash value, say, for damage to the rental car. You're not going to get like all this like loss of use, and there's a lot of other things that the rental company may say that you're obligated to pay them. So if you want to be super careful, and you also have deductibles, which you would have to also pay your collision deductible. So if you want to be super careful like me, you should take the rental coverage. Now, if you're less risk averse, there's plenty of people that go and they say, what, I have coverage under my policy. Now, this assumes you have full coverage. And I think that's sufficient. If there's a risk and there's going to be more than that, I'll let my insurance company work it out with the rental car company, and that's usually what they do. But I am very risk averse, so I don't do that. I take the rental coverage.
What about for travel? This is something that people always have questions about. It seems very murky and confusing when it comes to it. What should people consider when it comes to travel insurance?
Okay, travel insurance, much like event insurance, maybe more like event insurance. Now, the department just passed a travel insurance statute, so we are starting to regulate it more than it had previously been regulated. So those contracts are currently coming into more of an alignment, but they're not there yet. I would say one good example is a lot of people took out travel coverage during COVID, for COVID, and then when they couldn't go somewhere because of COVID, they found out based on the policy, which is a named peril policy. So they say basically, we will give you coverage for these issues, and then they have exclusions, and they say, but if these things happen, we will not give you coverage. And in a lot of cases, maybe the overwhelming number of cases, the COVID was not covered. So people took out a policy for the COVID. They ended up not going on the trip, like a lot of things, cruises, because of COVID. And they went and said, don't worry, I have travel insurance. And then the insurance company said, based on the reason you didn't go, why you didn't go, you're not covered. And then if you look at the policy, the insurance companies were correct. So I would be very careful to this day about travel insurance. And again, I know I keep saying this, I would work with my agent and go through exactly what your concerns are, because the agents have professional obligations when they make statements about what your coverage you're going to have. So, if there is a problem, you can go to them and say, hey, this is what happened. Please help me with the insurance company, and they should be able to provide help. If you buy insurance yourself, then you're just out there by yourself, and that's always, if you're an insurance professional yourself, that may be fine. But if you're not, and you're dealing with a non-standard coverage like travel, which varies, you're in it. You are, as you said, a murky world, and that's not a good place to be when you're worried about a very expensive trip. Much like a lot of as I said, the events can get very expensive with weddings, and the trips that people take can get very expensive. So really do your homework and make sure the policy you get, you're comfortable with the type of coverages they're going to provide you. It's super important.
Thank you to Property and Casualty Director James Fox and Property and Casualty Counsel Emily Doherty for putting that helpful information together. You can check out our wedding season consumer advisory in the episode description or by visiting nh.gov/insurance. And as always, if you have any questions regarding your coverage, don't forget our Consumer Services Division is here to help. You can call them at 800-852-3416 or email in consumerservices@ins.nh.gov. Created by the New Hampshire Legislature in 1993, the New Hampshire Insurance Fraud Unit is comprised of a staff of 4 and has the assistance of an insurance fraud prosecutor from the New Hampshire Department of Justice. The fraud unit processes an average of over 300 fraud referrals each year. NHRSA 41728 requires all insurers to report suspected insurance fraud to the New Hampshire Insurance Department Fraud Unit. Pursuant to NHRSA 41730, all insurers are also required to have anti-fraud initiatives in place that will result in the detection, prosecution, and prevention of fraudulent insurance claims. Let's throw it to the latest edition of the Fraud of the Month series with Fraud Director Brendhan Harris.
Hi, my name is Brendhan Harris, and I'm the Fraud Director at the New Hampshire Insurance Department's Fraud Unit. Today's series talks about a gentleman who had bought a car, a 1969 Chevelle, in hopes of fixing it up and flipping it and trying to make some money. So he bought the car, and after about a year worth of repairs and putting money into it, he later discovered it's not going to be worth nearly what he was hoping for. In fact, he was probably going to lose money. At that point, what he decided to do was get an insurance policy, and he submitted records like a fake bill of sale indicating he paid $50,000 for the car, and then he submitted a bunch of records that would support that the car is worth about $120,000. What would happen is if something happened to that car, it became a total loss or it was stolen, the carrier would be required to pay $120,000. Sure enough, about 60 days after he's got his insurance policy, he reports that on the day he got his car back from the shop and it was fixed up beautifully, some unknown suspect stole it from his store. That particular night, instead of bringing it home and putting it in his garage, he decided to leave it at a convenience store in the middle of nowhere. It was a pretty unbelievable story. The insurance carrier called him in and did an examination under oath, and they asked him how much he had paid for it. He went through the whole series of the claims, saying that he paid $50,000. As the investigation went on, what we found out was that he had actually paid $15,000 for this car. A little bit more investigation on his cell phone records provided a shop down in Salem, New Hampshire, and there were a number of calls there, so I drove there and interviewed the owner. The Chevelle had actually been brought in there and it had a blown engine. They took the engine out, and some people from a machine shop in the state of Maine came and took it away. Later, this gentleman came and talked to the owner of this shop and said he had sold the vehicle even though it didn't have an engine, and that the new buyer would be coming to take it away in the next couple of days. And sure enough, that happened. What this gentleman didn't tell the shop was that he had already reported it stolen, that it was considered a stolen vehicle. The insurance company decided that they were not going to pay the claim because he had lied about a bill of sale. When we found out that he had actually paid $15,000 rather than $50,000, they thought that was a material misrepresentation, so they denied his claim. About a year went by, and this was during that COVID time where it was hard to go and interview with people, and COVID was now coming to an end, and he resurfaced and sent a letter to the carrier asking them to reconsider their position, and stated that he had in fact bought 2 1969 Chevelles back in May of 2018, one for $15,000 and one for $50,000, and he had just forgot to mention the $50,000 one the first time. He said he took the $50,000 car and stripped all the parts off of it, put it on the $15,000 car, and then scrapped the $50,000 car. And he produced a bill of sale which only had a person's name, no address, no telephone number, no VIN number, no email address, no way to verify who this person was on the bill of sale that he supposedly purchased it from. But it did have a name on it. I developed enough probable cause and I did a search warrant on this man's house, and I seized a few important things. Some were the fake records that he had submitted to the carrier initially, like the fake bill of sale indicating he paid it for $50,000. And another item that I took from him was an iPad. On that iPad had some important things. One, it showed a picture of a black 1969 Chevelle that was an absolutely beautiful condition car, probably well worth maybe $100,000. It had the same name as a friend of his on Facebook that showed up on the second bill of sale that had never been seen before. I interviewed his girlfriend, and she said that she knew who this person was on the bill of sale. They lived down in Massachusetts. So with that information, I ran down to Massachusetts, interviewed that person. They were very mad at this man for using his name. They said they've never owned a 1969 Chevelle, and they've never sold this man a 1969 Chevelle. Now armed with that information, I was able to go and start to interview my target. Just before I went to go interview with him, as dumb Irish luck, I was running every picture I could find of a 1969 Chevelle black in color on Google, and I found the exact same car that I found on his iPad. What he had done is back in 2016, there was a YouTube video clip of this beautiful black Chevelle, and he watched the video and took still photos from that old video and produced those photos as the new car that he had purchased and then had stripped. He didn't know I had that information until I sat down. I spoke with him. He didn't disappoint me. He lied initially, they all do. And then after about 30 minutes, he began to tear up and cry and began to tell me the true story. He in fact had not purchased two 1969 Chevelles. He had only purchased the one for $15,000 and put a lot of money into it. It blew an engine. He panicked, and he and a friend of his that had been doing work on the car decided they would come up with this fraud scheme of creating fake records, buying an insurance policy for $120,000, and then making a false claim indicating it was stolen, and then get as much money as they can from the carrier and then split that profit. Ultimately, this gentleman was charged with felony insurance fraud and was found guilty. Thank you for attending another episode of Fraud of the Month with the New Hampshire Insurance Department's Fraud Unit. If at any time you feel like you might have some information about some insurance fraud you'd like to share with me, please call me directly. Again, my name is Brendhan Harris, and my telephone number is 603-271-2162.
The Fraud Unit has an outreach program. Staff will schedule community visits to discuss insurance fraud, its consequences, and how to recognize and prevent it. To set up an appointment for a fraud presentation for your group or to report a possible insurance fraud crime, please call 1-800-852-3416. And now let's throw it to my segment with Deputy Commissioner D.J. Bettencourt on appeals rights for health insurance claims. What are people's rights when it comes to appealing a claim denial with their insurance company, and what's the reason for kicking off this initiative?
Well, thanks very much, AJ, for the opportunity to talk about this important issue. So a few weeks ago, the Commissioner and I and some others from the department traveled to Louisville, Kentucky for the spring meeting of the National Association of Insurance Commissioners. And one of the real benefits of the NAIC is the ability for regulators across the country to come together and take a look at important issues and trends that we're seeing in different aspects of insurance. And so as part of that meeting, we heard a presentation from a study from the Kaiser Family Foundation regarding claims and denials in health insurance for fully insured health plans in the individual market. And it was a comprehensive study that looked at a wide range of issues with regards to claim denials. But backing out for a minute, in America, 83% of claims are paid by insurers and 17% are denied. And on its face, that doesn't sound terribly concerning until you appreciate that the 17% of claims that are denied represents 48 million claims. So obviously we need to understand why that's happening, because that's a lot of claims. Now, to be clear, it is entirely possible that all 48 million of those claims were properly denied. Unlikely, but possible. And they could be denied for entirely legitimate reasons. Things like people didn't get proper prior authorization before seeing a specialist, or chose an out-of-network provider, or the service may have been not medically necessary. However, what is greatly concerning to me is that this study found that only 1% of consumers appealed a denial. And so we're going to be spending a lot of time this month here at the department talking with consumers about their appeal rights.
And what are some big things when it comes to appeals rights that consumers should be aware of? Like, do they have the right, if a claim is denied, to call their insurance company? Like, what is that basic process?
They absolutely do. And here again is a piece of this that is concerning, because the study also showed that over 70% of the 48 million claims that were denied were classified as something other than one of those legitimate reasons that I mentioned previously. And that's scary. That is scary for us, because it's important for consumers to appreciate that there are different levels of denials. One is what we call electronic denial, which is the provider put in the wrong billing code for the service. And so the computer spits it out or just doesn't properly process. That's very scary, because if the provider doesn't appeal to the insurance carrier or the consumer doesn't appeal, then the consumer is left holding the bag for a service that should have been covered but isn't being covered simply because of a technical mistake. That is very, very scary to us. The other type of denial is a coverage denial. The provider has tried to rectify the situation with the insurer, and the insurer is coming back and saying, no, that particular service is not covered, or it's not medically necessary. Now, again, that may very well be an appropriate reason for a claim to be denied, but it's also very appealable, and the consumer should know about how that works, and I'll get to that in a minute. And then the third type of denial is what we call an escalated consumer denial, where the consumer themselves is trying to appeal to the company rather than their provider. And so that leads to the three types of appeals. So the first appeal is what we call a clinical or peer-to-peer review. And that coincides predominantly with a coverage denial, which is to say, they're saying that service is not covered in network, or that service is not medically necessary. And so what happens is the provider of the service, the provider who's working with the consumer, calls the medical director of the insurer and says, hey, this is what I'm seeing. This is why I believe this individual needs this service. Help me understand why you're saying that they don't. And hopefully they work that out between themselves. So that's a clinical or peer-to-peer review. The second one is an internal appeal. So the consumer appeals within the company, and that goes to somebody who has not been previously involved in the denial. So somebody within the company not involved in the previous denial, they'll do that review. And then the final is what we call an external review. So it's external from the insurance company to an independent review organization. We here at the department certify those organizations. We help handle the process of getting those appeals to those independent review organizations. And what it essentially serves as is binding arbitration. So whatever that independent review organization says with regard to medical necessity or in network, that is what goes. And importantly for consumers, they should know that they don't have to pay for that review. The insurance company pays for that review. So that's a bit of an overview of the situation as it pertains to claim denials in America and in New Hampshire, and what options are available to consumers to go through the appeals process. If they have any questions, they can come onto our website or give us a call. We are happy to walk with them every step of the way.
Thank you for listening to A Matter of Insurance, presented by the New Hampshire Insurance Department. You can subscribe to the show on all major podcast platforms. Be sure to follow us on Facebook and Twitter, and always remember that we are here to help. If you have problems with your insurance coverage, call the Consumer Services Unit at 1-800-852-3416 or email consumerservices@ins.nh.gov.